Hi, welcome. This is Cambridge House Live. My name is Jonathan Roth. I'm here with Cheryl Brandon. She is a portfolio manager with Waterton Global Resource Management. Cheryl, thanks for joining us. Because this seems to be the hot topic right now, to what degree is the European situation influencing what's happening here with the juniors?
Yeah, it's extremely material. Europe has had a difficult time. Some countries might be leaving the European Union. And with all of the difficulties that they've had, there's an extreme amount of uncertainty. With uncertainty, obviously, comes a lot of investments going into cash versus exposure to the market. So I think we'll continue to see that weakness for the next little while until we have some clarity.
So, and what's the feeling within your firm? Do you think that a country like Greece is going to leave the euro? What's your own perspective on that?
I don't really think that there is any other option at this point. We've seen the Eurobond strategy tossed out there. Germany continues to step away from that strategy.
Right.
And as a result, we don't really think that there are any other options other than Greece stepping outside of the European Union.
So do you feel that this is a good time for investors to get involved with the junior, or do you still see further to drop?
There are a lot of opportunities right now. I meet with 20 plus companies a week. A lot of companies don't have capital to deploy for their projects to continue to explore or develop their mines, but they have fantastic projects, really good management teams, and the number of companies that I see that have these types of projects that we make investments in, it just continues to increase and increase, but valuations continue to fall as a result, obviously, of what we're seeing on a macro level. But it doesn't change the general thesis. Our thesis is that this is a commodity bull market, and we still are firm believers, especially on the precious metal side. With all the weakness that we've seen in equities, the precious metals continue to move higher. Gold is very strong. Friday we saw a 3.5% increase in the value of gold on the back of weak U.S. jobs data. So when you tie it all together, although there is some weakness in the equity markets, the stocks continue to pull back, but there are some fantastic opportunities right now to make investments.
Right. Okay, now when you're looking at a junior, you're meeting with 20 companies every week, as you say. To what degree is the management team, the crucial aspect?
It's for certain, and in my opinion, the most important. Usually really good quality management teams only work on really good quality projects. And if you, as a management team, if you are unable to raise capital, and that's obviously the key for junior mining companies to actually go to the market, tell your story, have credibility, raise capital. If you can't do that, then your project basically won't have value creation. So having these good quality management teams in place is our number one criteria. Second is the asset quality, but again, usually good management teams coupled with good projects.
Now, what about CEO remuneration? I know that this is an issue in terms of investors looking at companies. You see some of these junior mining companies, there are some that are trading at a rather low price, and you have CEOs that are being paid $500,000-$600,000. To what extent do you think that that's reasonable, and does that impact your decisions one way or the other?
Yeah, I think if you look at the remuneration for CEOs in that $500,000 to $600,000 range, if you are seeing it with junior mining companies, it tends to not be remuneration in the form of cash. It tends to be in the form of stock and options. And I think that you have to keep management, you have to keep them motivated to continue to moving the project forward, and compensating them with stock and options keeps them aligned with the progress forward with equity investors. So I do think that some companies considering don't have access to capital will definitely have to revisit their G&A. But I also think that in order to make sure good quality management stays with companies in the junior mining space, they do need a fair amount of remuneration.
Now, as you just said, the situation obviously is fairly serious for juniors right now, given what's going on in the markets. I would assume that mid-tier companies are a lot better positioned than some of these, the lower guys. How do you see that changing over the next few months? There are some people that think that we could lose anywhere from 10 to 30 to 40% of juniors that are just going to evaporate over the next year or two. What's your take on that?
Yeah, and I think that's a good it has a high probability of that happening. I think there have been a lot of companies, just given the bull market that we had, a lot of companies that have, land packages that don't have the prospective ability to move forward, but can still tell the story. So I definitely agree that we will probably see a lot of those companies no longer exist. But I think the good projects will still be in place. Now, the mid-tier versus the junior mining sector, I think that's a key focus for us.
Right.
In the sense that we look for companies that have near-term cash flow. By near-term, we define it as 0 to 24 months out. So our main focus is on the companies that are actually bringing their mines into production. And I think when you have that kind of focus with high commodity prices, as long as they are able to generate revenue and continue with their operations and they become less reliant on the capital markets for equity raising, I think you have a huge opportunity in those companies specifically. On the exploration side, it is going to continue to be a lot more difficult. And I think on the exploration side is where we're going to see a lot of those companies that you referred to fall off.
Okay. Now, in terms of what Waterton Global does, I know that you generally only look at companies that are working in first world countries. Has that changed given what's going on in the economic climate to a certain extent?
We're actually launching a second strategy, which will not only focus on companies in stable and safe jurisdictions as we define as first world countries. We are also looking to make investments in more prospective countries.
Emerging economies.
In South America, emerging economies, some countries in Africa as well. And I think it kind of goes along with the whole theme. There's not a lot of capital available, and because we have a lot of capital and we want to take these projects forward, we are expanding our horizon given this opportunity.
Right, I got you. Now, you mentioned gold before. Where do you think gold is going here over the next, in the short term?
I think we'll see $2,000 in the very short term.
Really?
Yeah.
Within the next 3 months, 6 months?
I think by end of year, we'll definitely see 2,000. That's our firm belief is that gold is going to continue to propel higher. And what we saw on Friday is a good example of that. Jobs data came out, it was very weak out of the US, and we saw a $50, $55 move in gold to the upside. And it was in a matter of seconds. So I think that is going to continue to be the theme, and we're long-term bulls on commodities in general, but specifically on precious metals.
So now, again, just give me your overall outlook, 2012 and into 2013 for junior miners.
Our overall outlook, I think we're going to see some weakness still until we get some clarity. This uncertainty is not good for the stock market. Even if we do have high commodity prices, it becomes irrelevant. So until we see that certainty, which I think we will see it out of Europe in the next few months, at least a path forward. At this point, there is no clear path forward. And again, QE3 seems to be on the table coming out of the US. So if we see some more stimulus, that will be great as well for the markets. So in the near term, next quarter, a little bit of weakness, but I do think by the end of the year, we'll have seen some recovery, and there will be some fantastic opportunities over the next few months to make investments in the equity.
Excellent. Well, listen, thanks very much for your time. I
Great.
Appreciate it. Look forward to the next time.
Thank you.